Hey, good morning. Welcome to the morning brief. Today is Wednesday, April 2nd. What was it? Liberation Day? I thought it was just the day after April Fools, but hey, who knows? Anyway, we've got tariffs. They're going to get kicked in today and tomorrow, April 3rd. We're going to have reciprocal tariffs come in as other countries reciprocate. And then we expect Trump to also increase tariffs in addition to the reciprocation. So we have a full blown battle of the battle of the words, as you can speak, trade war, whatever you want to talk about. I got some comments about, are you a Trumper? Are you not a Trumper? You know what? Uh, I try really hard to keep politics out of this discussion. That being said, we have to talk about what is actually happening. That being said, a trader's job is not to be political. A trader's job is to trade the market. And the more volatility we have, the more opportunity we have. We don't care whether the market goes up. We don't care whether the market goes down. So it really doesn't matter what political party is in control. As long as we have movement and are able to take advantage of that movement, traders should be happy. Okay, so whether you agree, disagree, volatility is here, and that's the name of the game, is the volatility. So what's on the news for today besides the fact that it's Liberation Day? 8:15, we got non-farm employment change. Let me update this just so that, because that came in already. 155,000 versus 118, so slightly better, but still a pretty anemic number. 10 o'clock, we have factory orders month over month. 10:30, crude oil inventories. 4 p.m., we have President Trump speaking. I assume that is going to be about the tariffs. So the market may not be quite so crazy today because he's not speaking until after the market actually closes, but we'll have to wait to see. 4:30, FOMC member Krugler speaking. There you have it for today. So it should be a pretty wild day. If we look to the charts, you can see that we are gapping down. And I've had a lot of discussion with other traders about why do we have these two up days, before the tariffs kick in. And that's a lot of conspiracy goes into this discussion. Are they taking it up so they can take it down? Is this the retail traders buying the dip, and this is the big boys getting short, anticipating the tariffs? You know what? It just doesn't matter. I don't know. We were majorly oversold, and we bounced. Now it's going to continue the trend. It's what happens. We get oversold, we bounce. For no other reason than it's a relief rally. We're oversold. Lots of people who get short, they want to take their profits. It ends up creating an up day, and it's the profits from shorts that are making the market go up versus true buyers who want to buy and hold. So sometimes that's the case. Anyway, we're gapping down, big bar below all the moving averages, volumes above average. It could get ugly. Where could we go? Well, we've got these two lows from previous weeks. We've got a high volume node just right there at 55.33. I think those are going to be in the ballpark. If we break that, again, it's kind of look out below. It looks ugly below that. If we could take out yesterday's high, maybe we'll get some movement into the 5,700 area and approach those moving averages. We can get brought above the moving average, maybe 57.44 on the top side. You always got to play both sides, have an opinion of nothing with if it goes up, this is what I do. If it goes down, this is what I do. Inventory was positive yesterday with positive price action. 17,000, that's pretty decent. I do think this is retailers buying the dip, and this is the old guard or the big money selling into it. We'll just have to wait and see how that pans out. Taking a look at the overnight action, 83 points. So wow, volatility is 4 times average. Actually, the average is probably coming up now, maybe as high as 30 points is now average, but 83 points overnight. Big area confluence right here at around 56.95. So 56.95, 5,700, really a kind of a line in the sand. We get above that, probably going to be an up day, and maybe aggressively. On the downside, 5,600 is the number. 5,600, there's a little confluence at 5,607. If we get break 5,600, I would say 5580 and 5552-ish. Again, if we break above 5,700, I didn't continue to go up, but 5720, 5740, a little bit of confluence around 5771. Those are your numbers for today. Stock Traders Almanac, very interesting, 81%. I think that's the highest percentage that they produce on a yearly basis, 81%. So there's only a 19% chance the market will be down today. So that's extremely bullish from the Stock Traders Almanac. However, remember that that's a historical number. It's a big number. It may or may not pan out today. I think the situation with the Liberation Day it may not be conducive to bullish endeavors. However, according to the Stock Traders Almanac, 81%. So there you have multiple views of where this market could go. Hope you have a great day, and we'll see you again tomorrow. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.